But let's get you some market opinions since such a large event has now come and gone, the US Fed meet. What do you do with the market? Sunil Kaul, who is the equity strategist at Goldman Sachs, gives us his opinion on the Fed's guidance. He also talks about how he recently downgraded the IT sector in India and continues to believe that there are deep challenges that lie there, both on the revenue as well as on the margin side. Listen in.
The 75 basis points hike which we saw was in line with our expectation. The guidance obviously was a little bit much more hawkish, both in terms of the dot plots, but also in terms of the press conference later. And so we were actually looking at the Fed terminal rate of 4 to 4.25 range, and obviously the target rate was 50 basis points higher. So as a consequence of that, we also just changed our rate forecast. So we are now looking at a similar target Fed fund rate at 4.5475. So India kind of checks that box where it's one of the domestically demand-oriented markets, somewhat more defensive, but I would still point the fact that valuations in the market are a little bit more extreme or on the higher side, at least in terms of premium to the region. And so our base case here is that markets consolidate, at least on the next 3 to 6 months. IT, we actually did downgrade the sector recently, and so thought was basically, look, the market is still optimistic in terms of the US dollar revenue growth in there, looking at double-digit growth. So we think the top lines will slow down to sort of a mid-single-digit 5-6% growth, whereas valuations still are on elevated side, around sort of 23-24 times for the sector as a whole. So to us, looks like the valuations are still not factoring in the potential down cycle you can see in the tech sector. Obviously, I know that the sector has underperformed, but we still think there is more to go in here. If you look at the EM funds, what's interesting is that we have actually been seeing outflows from the EM active funds for a while. In fact, year to date, the EM active funds have actually seen close to $20-25 billion of net outflows. What has been holding up the flows is ETFs, EM ETFs, and the fact that India, because of its outperformance, its weight is also increasing, and then it's acting as a hedge to China, means that flows into India via the passive route have been increasing. But interestingly, if you sort of look at the past 3-4 weeks, we're also seeing a slowdown in the ETF flows.